All right, today we are decoding the market. We're taking a snapshot of some key stock trends. I've got this really dense technical analysis report. And you know what? We're going to break it down into a clear, visual story that actually makes sense.
Have you ever looked at one of those stock reports? You know, the ones filled with jargon like stochastic K14 or R-own_up, and just thought, I need a translator for this thing. Well, guess what? That's exactly what we're going to do today. We are tutting through all that noise to find the real story these numbers are trying to tell us about where these stocks could be headed.
So, the main tool we're using to do all this is called technical analysis. You can kind of think of it like financial forensics. We're looking at past price action, we're looking at volume data, all to spot patterns and, try to predict what might happen next. This is all about the charts and the stats, not the company's big balance sheet.
So here's the game plan for cracking this code. We're going to start with the really exciting ones, the high flyers that are showing some explosive growth. Then we'll dial it back a bit to the cautious climbers, check out the stocks that are probably best watched from the sidelines, and then we'll finish up by going bargain hunting for some of those riskier contrarian plays. And of course, we'll wrap it all up with your key takeaways. Let's dive right in.
First up, the most exciting group, the high flyers. Okay, these are the stocks where the data is just screaming momentum. All the signals are pointing towards a really clear, really powerful upward trend.
And our first high flyer is ARTV, that's ticker ARTV. The report calls this a strongly bullish breakout. The momentum is so strong it's actually described as overbought. Now that just means it's been bought so aggressively that a little short-term dip, a pullback is possible, even with that strong trend. But still, the recommendation here is a very clear, strong buy.
Now check this out. What's really wild is this number you see here, 39.73. That is its relative volume. To put that in perspective, it means the trading volume is nearly 40 times its normal average. This isn't just interest, folks. According to the data, that's a flat-out explosion of interest, and that's exactly what's fueling this powerful breakout.
Next up in the High Flyer Club is Navitas Semiconductor, or NVTS, and the language here is just as intense. Explosive bullish. Just like ARTV, it is also in that overbought territory with massive momentum. The analyst recommendation here is a buy, and they're even pointing to a target price of over $16.
All right, let's shift gears a bit and move to our next group. These are the cautious climbers. So the overall trend for these stocks is definitely bullish, but there are a few mixed signals in the data that suggest we need to keep a really careful eye on them. It's not just a simple green light. So first up, we have Canon Inc. The trend is bullish, it's got strong upward momentum, but, and this is really the key here, it's showing overbought conditions in the short term. So, while the outlook is positive, a little drop could be coming. And that's exactly why the recommendation is to buy on dips. Basically, wait for a small price drop to maybe find a better entry point.
Tesla, you knew it'd be in here. Always an interesting one. The report shows it in a bullish trend, but it's consolidating, which just means the price is kind of stuck, trading in a tight range. The caution here comes from the MACD. That's a key momentum tracker, and it's hinting that the upward push might be getting a little tired. So the recommendation isn't an aggressive buy, it's more of a hold, and just wait and see if it can break out above its current range.
And our third cautious climber is Plug Power. Now it's in a bullish uptrend, but right now it's in what's called a pullback phase. A lot like Tesla, its momentum indicators are weakening a bit. Now this could present an opportunity. The recommendation is to buy support, which means you'd look to buy if the price drops to a known level where it's bounced before, hoping for another rebound.
And this slide just perfectly illustrates the whole cautious climber theme. I mean, look, on one hand, you have a really strong bull case for each of them. Can's got momentum, Tesla's got that solid support level, and Plug is in a clear uptrend. But each one comes with its own specific risk. Can is overbought, Tesla's momentum is fading, and Plug's trading volume has been drying up on this pullback. It's a classic risk-reward balancing act.
Okay, next up are the stocks that the data suggest are probably best left on the sidelines. The signals here are they're either too mixed, too weak, or too flat to really point in any clear direction, up or down.
First in this group is Ford. The analysis shows it's pretty much stuck in a neutral range. Momentum is balanced, volatility is low, everything is just kind of steady. It's not falling, but it's not really climbing with any conviction either. So the recommendation is simply to hold it if you already own it, but there's no strong signal to buy or sell right now.
And then we have BURU. The report calls its trend volatile neutral. So while Ford was stable, BURU is all over the place, just without any clear direction. The volatility is listed as extreme. And when you have that much volatility but no real trend, it's just unpredictable noise. That's why the recommendation here is a firm avoid until things maybe stabilize a bit.
Now for our last group, and this one's for those of you who like to go against the grain, bargain hunting. These are what you'd call contrarian plays. The overall trend is bearish, meaning downwards, but there are specific signals suggesting they might be oversold and due for a bounce. I gotta say, this is definitely a higher risk strategy.
So first up is HIMS. The analysis shows a pretty clear downward trend after a sharp price drop. But here's the contrarian signal, the twist. An indicator called Williams %R, which measures buying and selling pressure, is at deep oversold levels. This creates this really fascinating tension. The trend is down, but the data suggests the selling has been excessive, which could be setting it up for a rebound.
NIO is in a very similar boat. The report calls it a mildly bearish correction. Momentum is weak. So you might be asking, why buy? Well, because, just like HIMS, it's hitting oversold territory on some key indicators. The recommendation is a classic contrarian move. Buy the oversold dip with a short-term price target of $750 for a potential bounce.
And finally, Open Door Technologies. This is almost a carbon copy of the NIO setup. You've got a bearish correction, weak momentum, and an oversold signal from its stochastic indicator. The strategy is exactly the same. Buy the stock precisely because it's down and showing signs that the selling might be overdone, and then you look for a potential bounce back towards that $8 mark. All right, we have covered a ton of ground, from the high flyers all the way to potential bargains. Let's put it all together in one simple summary. This is the big picture of everything we've just decoded.
And here it is, the entire snapshot in one place. You can clearly see the 4 categories we just walked through. Up top, you've got the high flyers, where those strong bullish trends led to simple buy recommendations. Next, the cautious climbers. Still bullish, but they require more nuanced strategies like buy on dips or hold. Then you have our sideline stocks, where the data suggests either holding steady or just avoiding them altogether. And finally, down at the bottom, our bargain hunting place, where those bearish trends have created potential buy-the-dip opportunities, all based on those key oversold signals.
So, at the end of the day, technical analysis gives us a powerful framework for understanding market sentiment just by looking at the data. Now remember, this is not financial advice, it's just a translation of what the numbers are telling us. We've decoded the report and the analysis is complete. The only question left is, what's your next move?